Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Sunday Roast, Sunday the 5th of May, and we're coming to you live and direct from Johannesburg. We've just actually landed from Lusaka, so we spent pretty much the last week in Zambia visiting various different assets from some of the companies that we've covered in the last year or two. How was your week in Kev? I think it's safe to say that I'm honestly exhausted, but in a good way. We've seen some stunning scenery, met some amazing people, and seen just how much potential this country has in terms of mineral resources.
Yeah, it's been an amazing week, I have to say. We were here in Zambia last year and we got a bit of a taste of it. But this year, we saw a lot more. And both a lot of mineralizations, a lot of extreme poverty, a lot of projects that could be pushed forward, a lot of good stuff, and also a bit of chaos because it's a third world country and it's Africa at the end of the day. But people were the highlights, I suppose. A lot of the people we met really had a big impression on us, so that was fantastic.
Yeah, did you notice any changes since, as you just alluded to, we were here in February of last year, and it's May now, sort of probably 14 months on from when we were last out there. Did you notice any sort of big changes in terms of Lusaka and the capital, etc.?
No, not really. I think what I did obviously see is that there is definitely things moving forward. The mining people in general want things to start moving forward, especially in the copper space. But you have a country that is incredibly rich in minerals, whether that be copper, whether it be gold, whether it be, we found out that there's a tungsten asset here in Zambia, found out there's graphite, we found out that there is, what else did we find out?
Uranium.
So, the abundance of stuff here is amazing. The majors are here. The majors are looking for the big stuff. But what I would say is that there is big potential for the smaller stuff as well. We saw some assets from Extract. We saw some assets from Galileo, including Sobe, Silver King. And they are standalone projects that will transform those companies.
Absolutely. We didn't even mention, obviously, Jubilee's Mufulira and Mopani project up there, which was absolutely, it's monstrous, isn't it? The asset, all that's like, you can see it going on for kilometers. There's an estimated 350 million tons of copper.
Yeah, no, it is vast, doesn't it? You just sort of drive around the processing plant or Mopani, is it? And you just come across a big hill, basically of black stuff, which is obviously
which is as high as around 1.5%. They're saying.
Yeah, 1.5% is what the Jubilee are saying, and in parts obviously probably much higher, and in other parts maybe slightly lower. But the scenario is that when they were digging that out of the ground 50, 60 years ago, they didn't have the same processing skills, and there's a very good chance that there is much higher rates of copper in some of those slag projects, because we now have the ability to take the copper out, whereas before we didn't. So that really will be undoubtedly a game changer for Jubilee. You can see 4 processing plants will only touch the surface, literally, and you've got no mining cost. Literally, you're digging it up and stepping out and processing. So quite incredible. And then we went to Luansobi, which was only a few kilometers. And actually, Luansobi, which I didn't really realize, even though I should have, is basically the extension of the Mufulira sort of mine, if you like,
the Mopani asset.
In Mopani asset. So there's an open pit possible there, and then further down the line to extend it to go underground because it dips into the Mopani asset. So and we saw, I don't know how many, but we saw lots of logs, didn't we? We saw lots of
went to the core sheds.
Went to the core sheds for Luansobi. We saw the cores also for Shinganda, and we're getting very excited about Shinganda for various different reasons, for gold, for copper. You had a piece in your hand that was like, I don't know what it was it 30, 40% copper? I don't remember.
Well, it's a geologist's nightmare. I think when they cut the core in half using the mill saw, it actually broke the saw. It was like 35 to 40% copper, and it was heavy, this piece of core.
Yeah. So, we had an amazing time. Our intention is we've recorded a lot of stuff as we've gone along. We're going to do a Zambia special where we will talk about our trip from beginning to end. And give you an overview of all of those things, because I think we can't do it justice in the time that we've got here. So I think it's better that we do a talking. And we've also scheduled that we will do some chat with Tulai, Tony, and possibly Colin Bird as well in terms of Zambia and the way forward as well. So yeah, there's a lot coming, and we will get all that stuff out to you over the next week to 10 days.
Okay, should we move on to our guest this week?
Yeah.
We welcome Jason Starr, Chief Executive of Dillistone Group, an AIM-quoted software supplier for the recruitment industry. Welcome, Jason.
Hi, Phil. Hi, Kevin. Nice to be here. I appreciate your time.
No problem. So before we delve deeper into what Dillistone actually does, let's look at the recent announcement regarding the audited final results of financial year 2023, ending the 31st of December 23. The company reported a 241% increase in adjusted operating profit to 0.22 million, marking its first profit since 2018. EBITDA rose 38% to 1.314 million, with a margin increase to 23.5%. Pre-tax loss improved by 77% to 0.104 million, despite a 2% decrease in revenue to 5.595 billion due to challenging market conditions. Recurring revenues remained steady, covering 100% of administration costs. EPS broke even at 0.01p, and net debt increased slightly to 1.169 million. The company also reduced CBIL debt by 0.3 million and generated 1.063 million in net cash from operating activities. You must be satisfied with the return to profitability and the company's performance amid market challenges, Jason.
Thanks, Phil. That's a really kind summary of the headlines, and as you say, some pretty impressive percentages. But I do have to accept that those percentages are large because they're based on fairly low numbers. This has been a good year. There's no question. We've been turning a corner for a number of years now, but I think this has been the beginning of putting the foot on the accelerator. But we have had a difficult time. So there's no question that those numbers are based on a very low point, and for the last few years we've struggled. But yeah, we're happy with last year's results, and we feel we'll make more progress this year. Yes.
Excellent. So can you just talk us through exactly what Dillistone business model is? And I believe it has many brands, sort of like namely Ikaru People, Voyager, etc.
Yeah, absolutely. So what we do fundamentally is we provide technology to recruiters. So when you go to a recruitment agency to hire a temp, when you call an exec search firm to hire a CEO, there's a decent chance they'll be using one of our products. So on the exec search space, we have FileFinder, Gated Talent, and Talentis. And in the contingency space, we have Voyager Infinity, we have ISV, and we have Mid-Office. And essentially, our products range from CRM for recruiters, sourcing tools to help find candidates. We have skills testing software, and we have tools to facilitate the making of payments to temps. So we have 3 or 4 products covering different parts of the market. Clients range from very small high street agencies. In the UK, we have clients in Europe, in Asia, in the States, in Africa. We also work with a small number of corporate clients, and as well as temping agencies, we have exec search firms as a client as well. So we do a number of things, but fundamentally our buyer is always a recruitment company. But just to clarify for lots of people that don't get this, we are not a recruitment company. We sell on a SaaS model to recruitment companies, broadly speaking.
So just explain to people again what SaaS means, how that's going to work. Because obviously in 2016, I presume, or 2016, 2018, when things were going a lot more swimmingly than they are now, you were not on a SaaS model. So you have changed this business fundamentally. So people need to understand that. So just give us an idea of how that sort of metamorphosis has happened.
Yeah, absolutely. So historically, software was sold as a license model, which means you would go out, you'd buy a product, you'd own it, physically install it on your machine. You may spend a small subscription on support, but that's basically how it would work. That started to change. It was basically the Salesforce model, and increasingly over the last few years, companies have sold by subscription. So rather than having a big upfront fee, you pay on a monthly basis for the products or services that you're taking. So essentially what that means is in the old days, you used to get big invoices up front and then very little. Under the current model, what typically happens is a client signs up with us today, and we realize revenue on a monthly basis. So our clients are now paying on a subscription basis for virtually all of our products. That's correct. Yeah.
So based on that subscription model, as you onboard more and more clients, that's going to go straight to the bottom line pretty quickly.
That's absolutely the idea of the model. Absolutely. So we, in a very challenging market at the moment, there's no doubt the recruitment industry is struggling, and that means that our customers are typically reducing the number of employees they have, which means they reduce the number of subscriptions they have to our platform rather than hiring new people. And relatively few firms are in the market to buy big new systems. So that's the downside of SaaS. It means it can drop, and it has dropped over the last couple of years. But as companies start to grow again, as recruitment companies start to licenses, they will literally just go to callers or register online or whatever it might be and say, I want 2 extra licenses, and the next month we're 150 quid better off, and then the month after we're 150 quid better off, and the month after we're 150 quid better off, and so on and so forth. So yeah, you're right. When customers with a SaaS model, it's all about getting the customers in, keeping them on as long as you possibly can, and then hopefully as they grow, you see your recurring revenue grow with it.
Yeah, so that was my next question, actually. Your sort of retention levels in this SaaS model, or what sort of percentages of people are you keeping on board?
It's a really difficult question to answer for a number of reasons, partly because we have a lot of different products, and they're all different, and they all have different retention levels. The other thing to keep in mind is that our historic retention changed a lot over the last couple of years because of the way of the world, because of COVID and so on and so forth. So yeah, historically we used to budget that we would lose 10% of our revenue a year, and we would typically always come in on the positive side of that. That hasn't been the case over the last few years because of the nature of the world we've been in. But hopefully in the longer term, we'll start to get back to that type of place.
Yeah, and from the point of view of, you mentioned the different sectors, and I'm assuming that there is different retention in those. If you're a small player and you're an executive looking for executives, where is the tie-in that basically says, well, I'm in this situation, I'm not going to change providers now because I understand this system, it has all my information, etc., etc.
Absolutely, that's a really good question, really smart question. So you're absolutely right. For a company that is a new startup and has virtually no data, it's relatively easy for them to switch systems when they're on the SaaS model. If they don't like it, they can give up and move away. When they've used it for 2 years and they've got data in it, and they've got systems and projects and plans and processes and everything else built into it, they become far, far less likely to switch. You're absolutely right. So generally speaking, what tends to happen is that our exec search products, which are the ones you mentioned, generally you either lose them quickly or you keep hang on to them for a long time. That's typically the case. We've got clients that have been using our product for more than a decade, and they've gone from one product to another product to another product as we've moved through the process. In fact, frankly, we've probably got customers in our group that over time have been with us for more than 20 years using different products as we've developed our different product streams. So yeah, once a customer is bedded in, then you hang on to them. The issue is always to onboard them, get them to use the system, and then retention follows. Again, what's tended to happen in recent years is you've had a lot of clients that, because of the nature of the market, it's a sole practitioner who leaves XYZ search with a layoff. They're laid off, they've got some money in their back pocket, they set themselves up in business, they run the business for 3 months, and then decide, actually, I don't like this, I want to go and work for a company again, so they close the business down. So again, the nature of the market for the last few years has been challenging, but we're coming out the other side of that at some point, and when we do, the SaaS model will really work for us. But again, to reiterate, our market has been very challenging for a couple of years. The business now is such that we can report figures as we did last year with significant growth, significant improvement based on very challenging market conditions. So when we do get to a more typical time where customers are signing and staying and growing, we think that will be putting the foot on the accelerator for us.
And from the point of view of those market conditions, what do you see out there? Do you see that things are starting to level up and possibly the shoots of growth, or give your idea?
It's $1 million question. I mean, there's no one that produces data on recruitment technology suppliers. So what we do is look at our clients, because there's some data on the state of recruitment market and recruitment companies. And if you look at Q1 of this year, most of the public recruitment companies announced bad results, cutbacks, and so on and so forth. But again, we are working on the basis this year that we're going to sell virtually nothing. Our forecast model for this year assumes that the vast majority of our revenue comes from existing customers, and that will be enough for us to grow our profitability because of the steps we've taken to make the business efficient. So our hope is that the business might start to improve, the market might start to improve by the back end of the year, but our assumption is that won't really impact our revenue until next year at the earliest.
And you mentioned that, obviously, because I can see that your margin has almost drastically increased over the last number of years, and not only the margin has increased, but you've also managed to pay down debt during this time as well. So you are becoming a leaner, more efficient model. So, in terms of paying down of debt, margin, do you see, one, the margin increasing? Two, do you see that debt's going to be repaid, or more of that debt will be repaid in the full year 24?
Yeah, well, it's a civil loan, so we've got a couple more years to pay it. We have the ability to take a delay if we want to. That's sort of part of the contract on that type of loan, but we have no intention of doing that. Our aim is to get rid of it as quickly as possible. So with a bit of luck, in about 2 years' time, that will be largely behind us. In terms of the margins, so for most of the last few years, our EBITDA margin's been between 12 and 15%. That was up to almost 24% in the most recent set of results. And our view is that it will stay at that level, or hopefully, improve as revenue grows. Certainly, we expect that to be the shape of the business going forward. Because of the investments we've made, everything we do now requires less processing power, less boxes, less people to implement it. We're just a much more efficient business than we were, and that allows us to have much better margins.
How many staff do you actually employ?
We have a region of 60.
Okay, so it's not a small company, and it's not a big company.
No, absolutely.
So what do most of those people do then?
So while we've made cuts over the last few years, we've pretty much largely ring-fenced our developers. So we have a decent number of developers. We probably have more people in the development department than we do in any other department. Now, the development department doesn't just mean developers; it means product managers and testers and everything else. But I'd say we probably have more developers than we have anything else. We have a very decent support team. We like to think that one of the reasons that we've been able to retain customers over the last few years has been because we offer superb support. Trustpilot scores across our business are typically 4.5 to 5 stars. We get really good reputations from our customers. So we have a great support team, great people working in it, and increasingly most of our sign-up work is done remotely now. So in terms of salespeople and trainers, we don't need anything like as many people as you used to have. In the old days, if we sold a system in Sweden, we'd have to send someone to Sweden for a week to do the installation. Now it's done online and it's all done remotely, so you get far less need for people to travel, far less people needed to do the work. Hence, most of our salaries now are focused on developer type roles.
So for the sake of people listening, if you were to have another year where you basically sustain the situation, which is what you're talking about, you would move how far up the scale in profitability? So in other words, you've moved to £200,000, I think it is, in profitability or thereabouts. How much further is that going to go in a year's time if everything stays the same? Which is never the case in any business. So let's be realistic.
Yeah.
Just give people a guide.
So it's obviously it's not for me to make financial forecasts, but I mean what I can say is in terms of our business, it's our cost base this year is pretty much fixed. We don't expect, even as a major uptick, we don't expect to add more people, and our expectation is that by the end of the year, our recurring revenues will cover about 125% of our revenues. So really, the growth opportunity really does come down to how quickly the markets come back, and I can't really predict that. I know that if the markets don't come back at all this year, we still expect to make progress. We still expect to, come out of the year with a better result than we had. But anything beyond that is going to be a reflection of how quickly recruiters start buying. But it's really good to be in a position to know that, we're well into the year now, and we know that we've got 95% of our revenue either in or expected to come from customers that we've already got. And so we're not dependent on going out and winning huge amounts of business. It's great to be in a position where, we expect that by the end of the year, our recurring revenues, our subscribed revenues, are going to be well above the cost of running the business, certainly at an EBITDA level. So,
we're talking in the range of we're talking about in the range of your fixed costs. I think if I remember when I read the accounts around the £4.5 to £5.5 million, and then the revenues, based on you're saying 25% higher than that, we could be revenues of £5.5 to £6 million. So there's a possibility then that you could be in a situation where you are making £1 million profit, you're paying down your loan, and basically the business hasn't really improved in terms of actual sales. Is that a fair summation or not?
I think it's fair to say that we're cautious about revenue this year. We don't expect to see much revenue growth this year, but the numbers will improve, and everything below the revenue line we expect to improve regardless of the market. Then it really is a question of what happens with the wider economy and the recruitment sector. But as I say, if you look at the path we've been on and the line and the direction of travel, it's very obviously going in one direction.
Yeah, so if you were a betting man and I said to you, the Nomad won't like this question either. In 3 years' time, where's the possibilities? Like, where could you be? You're worth 2.5 or 2.25 million pounds as we speak. Yep. With the potential based on my numbers of in a year's time having £1 million of profit and having paid down more debt. By 2026 you could be debt free. Where are you going?
Yeah, I think the £1 million figure for next year is probably a bit topic, but I think if you look at the number put out by our analyst, Yeah, they're expecting fair value. Yeah, we could get to 25p, which is clearly well beyond where we were when they put that figure out, which was a week or so ago now. That's obviously not the market capitalization before anyone makes any smart jokes. That's the share price.
Yeah.
Yeah.
I like that.
25p market capitalization.
So you scored a penny share.
Yeah.
You take a quid for the business one day. No.
So I notice you're in Chinham as well, because I used to work on that business part many years ago. It's on Crockford Lane, so that's a small world. It's I'm based out in Newbury, but many years ago I worked for a startup company on the estate there. It's a nice little estate there.
It's a very nice little estate. Yeah, we've got a very decent office there that we inherited from I think it was a healthcare company, but paid for it to be done up very, very nicely and then left the market. So we got a very good deal on it, and we've been there ever since. So yeah, it's great. It's a great estate, very accessible and very nice facilities. Yeah, absolutely. Feel free to drop in and see us one day.
Absolutely.
Yeah. So Jason, tell us a little bit about your background. What did you do before this? What on earth were you into recruitment software?
Well, obviously, my lifelong ambition was to be a professional footballer for Leyton Orient, and that didn't work out. So my second lifelong ambition was to go into recruitment software, and that did. No, it's actually, believe it or not, it's my first job out of university. Back in the day, we only had 4 or 5 employees. I had them all assassinated. That was a joke. That's not true at all. But basically, what happened was myself and a colleague did a management buyout. We brought in angel investors to fund it. We were able to grow the business for a few years. And then we floated it, and the rest is history. Some of it good, some of it bad. But yeah, so it's actually my first job out of university, essentially. I do also sit on the board of another AIM company, PCI Power, which you may know. It's a fintech business that's doing very well. But in terms of sort of core full-time jobs, this is what I've been doing for the last 20 years. Although obviously your readers or your listeners won't know this, but I don't look old enough for that to be true, but it actually is.
That's not true. It looks very old.
Oh, charming you are.
I did the sign up for this.
Yeah.
20 years, that means you must be about 44 then, Jason, yes?
Yeah, by 20, I probably should have said 30. Not quite 30 years, but not far off. But I think I'm 52 at last count. But to be honest, with inflation and everything else, as you get older, it's harder to remember how old you actually are.
Yeah, I agree with that. As soon as you go over 40, it becomes very hard to keep track, doesn't it? But daughter's like, how do you not know how old you are?
Guys, I'm 56 next week, and I know I'm 56.
Well, you've obviously been practicing, but many happy returns. You don't look a day over 25.
That's not true, but thank you very much. Anyway, on a more serious note, I think you obviously have turned the corner. I think things are looking up. You've got, as you said, you've got a very reliable model. Now these people who have been with you for a few years probably aren't going anywhere unless ultimately they fall out of business completely, which I think is still very unlikely. People still need to deal with people in this recruitment sector. When things pick up, you are going to increase that probably quite significantly. You should then become debt-free over the next few years as well. So I think this is looking like an extremely good opportunity for people to get in at the basement. I mean, you haven't been much lower than this in terms of price, have you, really?
No, absolutely. So when we put the results out last week, that was, I think, the lowest price we'd ever been. Increased a bit since then, but I would agree with the summary you just made, particularly about me looking younger than I am.
Yeah, I don't think I said that.
I'm paraphrasing.
Yeah.
I think that they want to be a professional football for Leyton Orient. Now that's a very interesting fact. Why Leyton Orient?
Yeah, that's some aspirations there. Why not game higher?
I'm sorry, but Leyton Orient, the world's finest football team, caveat supply. I've been a Leyton Orient supporter my entire life. My granddad used to support them. My dad wasn't particularly bothered, but my granddad used to support them, and they were the first team I saw, and I've been following them ever since. So up the O's, and they're also on a recovery story, having been grossly mismanaged now down to the National League. They won that. They run League 2, and they're going to win one, well, maybe not win, but get promoted out of League 1 in the next couple of years. So that's a success story.
So Leyton Orient are the Wrexham of the Football League that nobody knows about.
Yeah, we did it before them, and we did it with a lot less money than them. But yeah, absolutely. Yeah, we don't have any celebrity owners.
No Hollywood stars behind them as well.
No. Obviously, again, we got the cheap seat. So we've got, our chair is the former CEO of Dunkin' Donuts, and we've got a former Microsoft guy who's a major investor. So, but no celebs, I'm afraid. Not at this stage anyway. You never know. know what might happen next week in the world of football. But
so I hope you've got the box there and DSG advertised and the cucumber sandwiches ready for the Premier
with
League.
our cost base, we don't, unfortunately, no. But maybe in a few years' time.
Yeah. Is that a good use of shareholders' money, Kev, do you think?
Absolutely. Especially if you're entertaining big recruitment companies, I think it would be a great use of money.
Absolutely. I'm not sure that Leighton Orient actually has boxes, but maybe a cardboard box or something. But I could take in a cardboard box with DSG written over it, and if the football gets really bad, put it over someone's head. Maybe that would be the way of revenueising. But no, just to be clear, we don't spend our shareholders' money on football much as I would like them to. I'd like to. I suspect the rest of my board would not approve.
Very good. So we have one last question because you're appearing on the Sunday roast. What is your favourite roast dinner?
Oh, wow. So roast dinners are amazing. I mean, they are fantastic. They are what I eat, and pies. Generally speaking, depends on the mood I'm in. I do like a bit of pork. I'm also quite keen on lamb. You can't go wrong with beef. Turkey's morally wrong. I'm not into turkey at all. That's just dry and rubbish. But I'd probably go for pork, sometimes lamb. That's probably where I'd go.
Okay. And are you a gravy or a gravy off guy? I mean, like, obviously we're Northern boys, so we swarm for thinking gravy.
Yorkshire puddings as well is a must.
Yeah, Yorkshire puddings are a must, absolutely. My mum was from Yorkshire, so she was well into your gravy, and I've inherited a degree of that. So yes, I do like my gravy on a roast. I would be very happy to put it all over my Yorkshire pudding and my potatoes, yes, and the meat, obviously, yes.
Very good. And something that people don't know about you that would be very surprised to hear.
Oh, well, obviously the Leighton Orient bit is the bit that most people don't know, but that's probably it. My closest other claim to fame isn't really a claim to fame, but the back of my head once appeared in an advert for Ambrosia creamed rice, and my...
Oh, that's a good...
Yeah,
random, but good.
Yeah, well, this is the closest I've come to a modelling career. Maybe that gets me in as a Leighton Orient celebrity if ever I was in a position to invest. So who knows? But apart from that, probably the closest thing I've got is my son, which is claim to fame in my son, is hoping to get into the national team for rifle shooting. He hasn't, but hopes to. So that would almost be a claim to fame.
Excellent.
That comes off.
Good luck to him. We wish him all the best.
Absolutely.
Excellent.
As long as they
Okay.
don't shoot everybody, it'll be good.
No, I've been given advice on that, so I think you'll be fine.
Yeah, good. Well, on that note, we'll say Jason Starr, Chief Executive of Dillistone Group. Thanks very much for your time.
Thank you both, fellas. Have a safe flight. Nice to talk to you. Bye-bye.
Thanks, guys.
Okay, let's have a look at some of the movers and shakers of the last week. We had an announcement early in the week from Materia, didn't we? They negotiated a net smelter royalty to the tune of about 200,000. What did you make of that news?
Well, it was a bit amazing, to be honest with you. I mean, the market obviously didn't react to it because the market's asleep, but there hasn't actually been a definition of resource in this lithium. And somebody's just given them 200,000 for potentially what might come out of it. So
they signed an agreement to sell an interest of the 1.4% of the Rio Tinto JV, which is the one that we actually went down to see at HCK1, that lithium asset, and we also met Rio Tinto. So yeah, interesting, isn't it, that they managed to get that one away, really, as you say, as part of that.
Yeah,
it's not really been proven up as yet, has it?
No, it's 1.4% and then reduces to 1.25%, I think. But basically what it means is that the percentage of sort of likelihood of there being lithium there is obviously extremely high, which you would have thought, would affect the market positively. And then they went on and raised another 500,000 in CLNs. Again, I didn't get a chance to read the full details of that, but it basically now means they're cashed up, able to move forward in terms of the Moroccan assets. Because obviously in Rwanda, the Rio Tinto assets are basically being paid for by Rio Tinto. So yeah, it's starting to look pretty exciting from a very low level.
Yeah, it's looking good, that one. So also we caught up with Conroy Gold, didn't we, in the week? They announced an update on the joint venture. Obviously, they announced that Demir Export and Conroy entered into a binding agreement to exit the joint venture with a net smelter royalty. 5.65 million euros expenditure was completed by Demir on the project. Major progress achieved during that JV, including the discovery of a second district-scale gold trend, and a new partner is currently being sought for ongoing exploration. So we obviously caught up with Professor, didn't we, in the week, and we had a good chat, and Cathal as well. And so what do you make of that one? I mean, obviously there's a lot of surprise as to the fact that they didn't move on to what I think it's like effectively phase 2. How do you read it? How do you read that RNS and the comments?
I read it that basically I think Conroy weren't super satisfied with what Demir were doing because they were taking too long to do what they were doing. Looking at it now, I think Demir is fighting fires in Turkey. The economy is not good in Turkey, and they pretty much had the choice, I think, to carry on and have to commit probably 20, 30, 40 million euros to bring Trugget or Clay Lake up to scratch, and they effectively didn't want to do it. And I think also from Conroy's point of view, the whole system and the two strikes are now so big that they need someone with gold experience, and Demir haven't had it. They've not really had gold assets. They've been in base metals. So I think this was a clear situation so that they held 100% of licenses again. And I fully expect somebody big is coming in. When? Who knows?
Yeah.
But I think
that's what I was going to say to you. Do you think that they're going to be able to find? Do you think they're going to be able to find another joint venture partner for the project?
I think it's unlikely that they haven't already found them, to be honest. I think it's unlikely they haven't already found them because you wouldn't just close down the joint venture if that was the case.
Okay. All right. I think the biggest mover this week was Gem Diamonds. GemD was the ticker. They moved 60% on the recovery of a 118.74 carat type 2 white diamond. So that was very well received. There was a Helix exploration, the David Minchin helium play in the US with Bo Sievers on as CEO, and that one had a good week, up 52%. So it's nice to see finally some movement in some of those resource sector plays. What else has been on your radar this week? Anything else that you've seen that you've liked?
Not that I've liked. There was a few that had to be suspended because they missed the end of the quarter, putting the results in.
Yeah, I saw that by the end of May deadline, wasn't it? There was a few. Yeah. I think FCM went off from
end of April.
Yeah.
But I think there's a lot less of these auditing companies about. There's one, and obviously it's causing problems with these smaller caps now.
Yeah.
So I think it's teething problems, to be honest. I don't think there's anything materially wrong with First Class Metals. There was Genflow as well, and there was others as well. There was at least 3 or 4.
There was about 6 or 7 one morning that went off market that was suspended because of accountancy issues. So the other one that came up in the week was Kavanga. I don't know if you saw that. There was actually two announcements. The first one came, I think, on like Monday of the week, and it was basically that they'd raised, hadn't they, up to the tune of about 3 million. So it's really good to see a company raising, mining company, junior exploration company raising that amount of money. What do you make of the raise? And obviously then there was a subsequent news on the Hillside project. So that was the option exercise update, which we've announced. I think there was something to the tune of 600,000 cash consideration to be paid to the seller Hillside, 50,000 cash to be paid to the sellers of Leopard South as well. So yeah, firstly on the raise, it's nice to see companies getting sort of largest raises away, isn't it?
Yeah, well, we had a quick chat with Ben, didn't we, during the week, Ben Turney, and we're going to have a more in-depth chat with him, I think, over the coming weeks, as he was flying out to Zimbabwe today, I think it was, or maybe even yesterday, to start to check on that. I think potentially it's a phenomenal project that they've got going there, and I want to know more about it. I think they're now cashed up. They've got the opportunity to move forward with that, so Kavango itself was 5 times higher than it is today, I think. So why was it worth 5 times more than it is now? I don't know. Because the projects are probably more advanced than they were then.
Yeah.
Let's see what the situation is. But I think a very interesting one. What I want to know more about it.
Yeah, absolutely. Then there was an announcement from Galileo Resources. They announced that they'd received the second tranche payment totaling approximately 48.8 million South African rand, which is approximately 2.1 million pounds. So that was good to see that money coming in, wasn't it?
Yeah, well, that deal's done now. There was 2 parts to that, I think. And Galileo's completely cashed up, ready to go in all the assets that we saw. We got Sobi, you got Shinganda. So there is lots of opportunity there in Galileo. And now they've got the cash as well. Same as Extract Resources, also got the cash. Extract now with the licenses in Northwest Zambia, which we haven't really talked about in this podcast. So we will talk in great degree when we do our Zambia special. But they've got the Silver King one, which was announced just a few months ago. We visited that, and that looks like spectacular, basically, in terms of its ability to produce revenue within the next couple of years. And then you've got African Pioneer took a loan, I think it was, for
£1 million.
Another £500,000. Yes, it's diluted, but at a higher price than today's price. So 2.8p, 4p with the 2 things, with some warrants thrown in when they take the cash. Yeah, I didn't get the chance to do the sums, but I think it's diluted, but at a higher level than it currently is. And I think that, says that the assets that they've got in Northwest Zambia and Bongo in Namibia. You know, these guys, these two things are going to be game changers for African pioneer in the same way as some of the assets in Extract really are going to be game changers. Can't stress enough what we've seen on the ground. You know, what I see is materially undervalued. It's ridiculous.
Absolutely. And then there was an announcement from Sovereign Metals that they're going to increase the graphite bulk sample preparation capacity. And they've got industrial scale spiral concentrated to be installed at the expanded laboratory and testing facility in Lilongwe in the coming weeks. Spiral throughput capacity of up to 10 tons per hour of ore for graphite and rutile sample preparation. So things are moving quickly there on site in Malawi there. It's good to see them actually starting to prepare and get all these graphite sort of sampling methods in place.
Yeah, I mean, again, from a valuation point of view, with the world's biggest rutile deposit, the world's second biggest graphite deposit on the ground there, this is something that has to change in terms of people's understanding of what's ahead of this. You know, the revenue that's going to come from this when it actually starts to happen is going to be phenomenal, and they're obviously starting to test that, and we'll see where that goes, you know, over the next weeks and months. Sapan has spoken to us. We may well be going out to Malawi to see what's going on in the next couple of months, so watch the space. We'll see what's happening.
Okay, and then there was also an announcement on the 3rd of May on Friday from Prospect Energy that announced that they gave an update on the Selva Malvezi activity report. And it wasn't massive. Obviously, they said it continued to deliver. Obviously, they were operating, was progressing the permitting process. And then I think the announcement was that in terms of financials, it was something circa about 705,000 euros. It was net to Prospects. So I'm not sure whether those numbers were how they compared to the previous. I think they were slightly down on the previous quarters.
Yeah, well, they're slightly at the mercy of the gas price also, or not slightly, completely at the mercy of the gas price. And there was downward pressure on that gas price, but it's actually started to rise again. So you may expect that the next quarter is going to be a bit better in terms of April, May, June. Okay, yeah, I think it said in the RNS, it was 29 to 30. We've seen an increase in the gas price, I think, over the last month or so. So you might expect that could be a bit higher in the next quarter. Again, they're waiting for the licenses to try and expand production at Selva. And can't see anything but pretty good upside coming there in not too distant future.
Good. Well, I don't think I've got anything else. We'll wait until obviously board flights back home, get back for the bank holiday weekend. Obviously, this will go out on the normal time on the Sunday, but anything else to add at this point?
Nothing else to add either. So we'll look forward to speaking to you next week. Zambia special coming back. The one thing that I will mention to you is electric guitar. We have had the second AIM listing of the year, which is called Electric Guitar, which is, again, a tech company that is going to be doing stuff to help first-party data, because basically laws are coming in to stop people using third-party data. So we caught up with John Reagan. It listed on Friday, and we'll have a podcast going out on Tuesday morning when the market opens. So have a good listen to that and see what you think.
Yeah, it does look really interesting. I like these tech sort of plays. And then, as you say, they basically, it was a reverse takeover, wasn't it, of the Three Radical Limited, who've got this Voco software. And as you say, they're listed on Friday. I did the RTO through. They're already on this ELEG as the ticker. And they raised something circa about 1.3 million at the same time. So it was good to see, again, funds being raised. But yeah, we'll bring you that podcast in the week and have a listen, see what you think. But in the meantime, say thanks for listening. If you like what you heard, hit the subscribe and also hit the bell icon for any future notifications of any further episodes. Thanks for listening.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.